All right, so welcome to another video. Today we're going to take a look at Shopify. I'm going to show you how to set up a butterfly strategy. Some of the things that are going to be in this video may be a little more complicated for you, and that's where we have the one-on-one coaching sessions and just some of the other things that you could go ahead and grab when it comes to working together with me. And you can do that on tradersfly.com. There's a ton of freebies there. Check out the classes that we also have. And if you want to go in and do a one-on-one thing, it's under the coaching section there as well. You can also go and join the Discord channel. That's where I can answer some of your questions. So if you have things about the charts, maybe ideas, stock picks, that kind of thing, some new upcoming videos and things that have been posted also are there as well. And that is, the link is going to be in the description there that you can check out. Okay, so let's get started with Boeing. I'm just going to try to give you a little thought process to getting started with the trade. If you're a little more intermediate to advanced, this might be too easy for you. But for those of you that are just getting started with options, what we want to do is just kind of take a look at how do we do something with Shopify. And the reason why we might want to do something with Shopify, I'll just show you the chart. If we look at Shopify, the stock has basically been going down for quite a while. And this downward trend, hey, it looks like we're starting to go to the upside. So what if this is a next move to the upside, right? We're kind of basing around 500. And we want to go and expose ourselves to the upside, maybe, because that's typically most people in general, they want to go to the upside. But how do we set up a trade that's maybe not too crazy or too overly exposed? Okay, so here is an idea for you on Shopify. We're going to do a butterfly. I'm going to start out with actually an easier butterfly concept. So let's start out with actually something as simple as going out 60 days. So we're going to go in, go right here to 60 days, and I will hop in. We could start out with something like let's say a 600 strike right here. And if we do a 600 strike, that puts us at a delta of 0.27 or 27. So I will right click, sell a vertical. So this is one step to doing this. And you'll see how I'll build the butterfly here in just a second. So if we got this kind of spread right here, okay, the problem a little bit with this is we are actually risking about $385 when you actually check this out. So I just moved my mouse right there. You can see it's $385. So we'll go ahead and kind of... Okay, so you can see that could be a little bit of a problem for 380 if that's too much for you, especially if that stock pulls back heavily. So one of the ways to kind of reduce this is actually to bring in this a bit closer. So then you'll use less capital. Granted, it probably won't expire there, but we'll still be then bullish, right? So what we'll do is we'll take this 600 and we'll actually go to maybe let's call it a 660 or 670. And you'll see actually the capital used is actually going to be less. So if I go 660, 650, and you can see now my capital here, let's see if we can go 655, there we go. My capital used, instead of like 300 and some, I'm only at 280. So instead of 360, I'm at about $280. So the closer I get, actually, the less capital I actually use, ironically enough, right? So let's go to 685 now. And look at that, now I'm only using $260 of capital. So that's what we want to do. We want to first get a little closer to use a little less capital. But I'll show you a kind of nice sweet spot here. So I'm going to go a little outside of it right now, and I'm going to go in now and build the other side for the butterfly. So I will now go in and sell maybe a little bit past it. So we're going to go to 700, and I'm just starting it slow for you guys, just so you get a good grasp of it. So now I sold something a little further out there, and this is kind of like an iron condor, so a very tight iron condor. You can see 700 to 705. So how do I convert this a little more into a butterfly? Well, a butterfly, all it is it's the same strike. So if I go 680 here on the strike and then go to 685, there's my butterfly. Now you can see it's super, super tight. And it's not exactly what I really want, because, you know, I'm looking for, let's go 680, 675. So it's a little tight. So what I want to do is spread out some of these strikes. So if I want to go to the put side, and I want to buy my protection, one extra strike here, I've got a little bit of a wider area. And then if I go to the call side, the same thing. I'm going to go in, and now I've got, again, a little bit of wider area. So now what I'm doing is I'm just kind of spreading this out and going now to a 10 points. And then what I could do is go, you know, more. And then here again, buy my protection a little more. So now I've got 20 points difference, and I could go even more. Okay, so with Shopify, you have to go a little wider. So now what you'll see is I'm only risking about $195 and I'm spread out on my butterflies. So this is the one way to kind of do it and construct it. Now I could do it all at once and construct the same exact butterfly, all just doing it at once. This would be an iron butterfly because I've got puts and calls. But if I just do the butterfly construction here, just all calls at the 680 strike, I could do that as well. So let's go 680. Let's do all puts, buy, and we will go to butterfly right here. And now 680, and then we'll go to 650 on the, there we go. And then we'll go to 710. And now we've got the exact same butterfly. I'll just uncheck that one. You can see it's the same type of butterfly construction. Okay, so from a risk perspective, I'm still risking $190 here. So now what I can do is actually start playing with it. So here I can start moving it around and playing with it. And I can go a little wider and a little wider. And how wide do you want to go? Well, you don't want to go too wide because the wider you go, the more risk you kind of actually incur. So here I'm risking actually 565 now, as you can see. And if I want to go bullish on it, what I'll actually want to do is either tighten up or bring this further out strike closer, or this strike down further away. So let's say I've got 50-point difference here. I might only have 40-point difference here. Okay. So you're just basically offsetting it. So what I'm going to do here is just bring this one down a little bit. And now I've got a little bit of a bullish view on this. And I could do maybe one more if I like. And now I've got a fairly nice bullish move on a butterfly spread, and it's not as expensive as doing something that wide, because if I did a 620 and a 680, it would be much more expensive. So look, 680 and a 620, if you look at the credit you receive versus the risk you take on, you would be paying $3,320 here. That's the risk on this one. Okay, now granted, you can make a lot more, 2680, so 2680, but what we've done here is now tackle on another side here, so that way we don't have a bit of a problem. Okay, so when we go in here and we've got this butterfly, now we've reduced that risk on that upside. So this is what we might want to do when it comes to these bigger stocks, is actually play them more with a butterfly. And we still have a bullish exposure here with a delta of 1.889. We still got a theta and in short Vegas, so it still gives us an upside view. It's just the thing is we're using a lot less capital here, about half the capital, because this other side, this other vertical that we're selling, so this is kind of the call vertical, think about it, that we're selling is bringing in some credit for us, and that's why our losses are not as big or as nasty. So anyway, when you start looking at doing a spread like this is one way to get kind of bullish on it without getting too aggressive. And you might say, hey, well, what about this? This thing is under the zero line. Yeah, that's fine, but that's at expiration. Before that time frame, remember, this white line is going to keep growing. And if we pop a little bit right here, we'll be at the $180 price, and we're making about $180 on 1200, right? So if, on 1200, if we make 120, that's still 10% right there, right? So if out of 1200 we make 120, we get 10% profit. So, you know, by making 180, we're making quite a bit more than 10%. And that's all you're doing, is you're trying to get it to pop, and you don't have to hold it till expiration, because at expiration, you will start losing money eventually on this, but that's a bit later. So with time, if this just holds or pops a bit, and then even if it pulls back right here, so say it pops and then pulls back, you could actually be ahead quite a bit, and you're risking 1200, and you could be making, you know, almost 1,000. Now that's probably unlikely, but I'm just showing you that you don't have to look at the expiration. You can look at the current date and time and how it'll work through time. And that's really what we're aiming to do here, is set up a butterfly construction that's a little off balance. You know, you could pick a direction, a little bullish because the market's a little whippy. And then that way you could say, hey, I'm choosing a direction. Now, if you want to go bearish, you could do that as well. And that's why I'm being a little bit more risk on this leg than I am on this leg. So the difference when you look at these strikes and we start zooming in, you can see I've basically got here, I've got, let's see, about 60 points I can't see my mouse. 60-point difference here between these two, 620 and 680. And then the 680 and 630, I've got a 50-point difference. And because of that difference, it allows me to have this offset and still have that bullish tilt on there. So anyway, I hope that helps. This would be the strategy. The management part of this is if it goes up into this zone, even a little bullish right here, even if it goes past your zero delta, like let's say over here, and now your delta turns into a negative, I'd still keep it, because then what's going to happen is you'll have a little bit of this curve, and when it does pull back, you could make a little bit of money. But once it starts getting kind of in this area, like let's say about 850, you'd probably sell and take your money. If you had multiple contracts, you could take off half. The other thing is if it starts pulling back right here, what you could do is say, hey, well, I'm going to get more bullish and put on another butterfly here. So this way it extends your range. Okay. So now you've got a much bigger range from here to here, and do the same thing. Now, keep in mind, if this keeps going down and keeps going down, how many times do you want to do that? You got to keep that in check. So save enough money. If you want to give another more range to it, you got to have a little bit more downside room to be able to add to this position. Otherwise, what you could do is just like say, hey, when it gets to this break-even point, this is another version for those of you that want a hard stop. Just stop at the break-even, and that could be another area. And that gives you from here, from this current point, 632 and 680, another 40, 50 points lower from where it is, because we're already down at almost about 100 points today. So you're already much lower than that 800 we were not too long ago. So again, it just depends on your view of the stock and how you want to be positioned. Anyways, I hope that helps. That would be a basic strategy and concept for something like this. You're building onto kind of a long portfolio. The market's a little bit weak, and this is partly because when you just look at just the overall move we've had with the SPY, we've had a fairly significant move here over the last few days. So it's to be expected that, we'll probably get a little bit of a pullback at some point here soon, because we've just been kind of grinding up quite a bit. So anyway, I hope that helps. Thank you so much for joining me. Enjoy the rest of the week ahead. Feel free to join me on Discord, YouTube, tradersfly.com, sign up to a class, and continue to learn. And if you want to do a one-on-one session as well, feel free to reach out and we can work together as well. Thanks for joining me. I'll see you next time.